All right, y'all. So, I'm about to show y'all a perfect example of ICC on gold, and hopefully y'all understand it from this video. I'm gonna explain it into detail. Um, if you follow me, then you know I trade ICC, and ICC stands for indication, correction, then continuation. I learned how to trade ICC from Trades by Side, but with that being said, let me get into it. So in this video, I'm gonna explain the way that Trades by Side do it, the way that he teaches us, and I'm gonna explain to y'all the way that I do it personally to be on the safe side. So Trades by Side strategy is gonna help you get the bigger trade. You know, you gonna get the bigger trade, the most money out of this trade. My trade, I would say, is like the least risky. So with that being said, let me get into it. So when you first come on your computer, as you know, you want to go to the hourly, right? And I'm using these points because this was the I've been supposed to make this video, but I'm using these points specifically, right? So when we come on our computer right now, this is not the previous swings. Obviously, it's going to be this swing right here and this swing right here if we're talking about this area, but we're not worried about none of this right now, right? So these are our points. Just worry about this point and this point being the lowest point that you see right now. I mean, this point and this point being the highest and the lowest point that you see, right? So for this specific example, we had this swing high right here. So when we looking for these swing points, we want to look for the points that affected the market. So as you can see from this point, it seems as if the market pushed, as if this line pushed the market down or something, right? So this line affected the market. This is the swing. This is the high that affected the market. So this is why we consider this a swing high. Same for the downside. Or actually, it's this one. Sorry, y'all. Same for the downside. This is the area where price bounced off and went up. Right? So this is kind of what we would see and what we would be waiting for, price to take out one of these points. So as you can see, we get our first break right here. Price took out this swing high, right? So when price took out this swing high, that gave us our first sign of indication, right? Indication is just when the price breaks out the swing high or the swing low. And when we look for these indications, we want an actual high, a green candle, then a red candle. We want an actual high and move up, then move down. We don't just want a big green candle and then that's it, right? We want an actual high or an actual low. And if you don't see it on the hourly, sometimes you have to scale down to the 30-minute to actually see that the actual low or that high. But as you can see, we get this indication point right here. Price took out those highs, right? Once we get this indication point, now we're waiting for what? A correction, right? So if you analyze the market right now, you see that price gave us this fair value gap right here. So this candle, and this candle, these three candles formed a fair value gap. So when it comes to your correction, you kind of want to see what the market gives you to kind of figure out where you want to have your correction point, right? So a lot of the times it does leave these fair value gaps. Like 90% of the time it's leaving these fair value gaps. So we will have our points at the end of these fair value gaps because we would not want a candle to close below this point, because if a candle closes below this point, that's basically telling us that it's a reversal, because price should respect this fair value gap if it's going to continue to the upside, right? So this will be my point for correction. But as you can see, price didn't even come down that far. It came down a little correction. And if we go down to the 5-minute, we could kind of see everything all in 4K. But Yeah, as you can see, this is where price came down during that correction. Get this indication right here. Come down for a correction. So after this correction, we want to see price start that uptrend again, right? So obviously on the hour, you're not going to really see it best, right? Because it's just big candles. You know, you're not going to really see it the best. So you want to go down to those smaller time frames so that you can break it down and actually see what the market is doing. So I usually go to the 5 minute if the 15 minute not showing me, you know, everything in detail how I would want to see. But you could go down to the 15 minute or the 5 minute, whichever look best to you. But we come down to the 5 minute time frame. We see that this is the correction point that it made. So now we're waiting for a price to start back in the uptrend, right? We see that it's making this correction. We trying to see how far it's going to correct down. You start to see price come back up. So okay, now we're interested. We're ready to be looking, to be on the lookout for that uptrend, because price did not continue that downtrend momentum. It came up. So now we have this low right here and we have this high right here, right? But we failed to make a higher high and we failed to make a lower low. So we still didn't press enter yet, but we get this low right here. We get this high right here. Then we get a higher high and a higher low. So now we're interested. We're almost ready to buy. So the way trades by side do it is once you got this confirmation right here, you got this low and you got this high, and then price closed above that high, he will enter right here, right? This will be your sign to take that long right here, because you got a candle closure, or it will kind of be right there after that candle closed. And then we will have our points. You will have your stop loss under this. You'll have your stop loss under that swing. And then we'll want to have our take profit. So this indication point would be that first take profit. And that's usually how trades by side do it, at this first take profit. But to get the long to get the good trade, he will put it at the top of this candle right here, because you have to look at the market, man. We got a lot of liquidity, right? It's a lot of orders that haven't been filled. So we're going to try to catch the long trade, right? So we would have put it right here at the top of this bearish candle. That would have been the second take profit point. But let's go down here. Let's go down here. So this how trades by side would have did it. You know, it would have cashed this way as well. We would have wanted to this would have been our first take profit point. And even if you did it right here, like the way that he do it, that would still be a good risk to reward. Like, you know, if you just doing the first take profit point, you're not even trying to catch the bigger trade. This would still cash just like this. As you can see, it executed perfectly. But the way that I do it to be on a safer side is I wait for a price to come above this indication point. So as y'all know, we have this indication point right here. We had the correction. So now we're waiting on that continuation. And for me, I wait for price to actually come back above this indication point, because now when it comes above this point, I know that it's strong momentum now. Like I know it's, you know, price is going to almost guaranteedly just continue to shoot up, especially because I know that it's a lot of liquidity over here, right? So for me, I would have waited for price to come back above this indication point. I would come down to the 5. I would probably be looking at the 5. This is the indication point. Price came up. It closed right there. I would have been looking. It has a lot of momentum to the upside. So now I'm interested. This is when price closed above that indication point right here, right? I will put my stop loss under this box, because price should not go back under this box now. It should not go back under this swing high that we had now that it's pushing up, right? And I'm going to, and I will be aiming for the same point as trades by side. And even if you kind of trade up there, if you went up there, you would have still cashed out. If you would have still, wanted the bigger trade the way that I do it, you would have still cashed out. But I would have put my take profit at this point, and that would have still been a good risk to reward. And as you see, it would have cashed either way. So this is just how I use the strategy. This is, I hope this helped y'all out. I hope y'all understood from this video. But yeah, this is how I do the ICC strategy, and also how Trades by Side teaches us how to do the ICC strategy. And as you can see, we can go back down and do it all step by step. And we get to swing low, we get to swing high. What's the first step of ICC? Indication. Indication right here. Price took out these swing highs. Indication. After that is the correction. Price come down to correct. Doesn't go past its fair value gap. After it corrects, we see a continuation. Price continues to the upside, and you would still cash even if you were looking just on the hourly time frame. So this is how I use it, and I hope y'all understood from the video. But follow me for more videos like this, and comment below things y'all would like for me to talk about and explain. But yeah.